Welcome to the Hurley Financial Services commentary for Tuesday, November 28th. I do hope you had a great Thanksgiving. And more so, I hope that, I hope that as I have been talking to you throughout the year, you guys have gained some value in hearing the ups and the downs of a money manager, the things I struggle with, the things that I look at, the things that make me worry about what I do for people in general. In fact, I'm tempted, but I'm going to ask you here at the end. I will admit that the other day, in fact, I'll ask you guys, what do you think I did the other day that made me scratch my head a little bit? Out of curiosity, I'm going to have you be more interactive today than maybe in the past. What do you think I did the other day that left me scratching my head a little bit? And Keeve, I think I've already told you, so I don't want you to say anything. But what do you think I did that left me scratching my head a little bit? David, I ate too much turkey and I watched football. Okay. Yes, I ate too much turkey, but I really didn't watch any football this year. But sure. No, really, think about it. What do you think I did as a money manager made me scratch my head? Change your mind on a night. Bought some puts thinking we would go down. All right, there you go. Believe it or not, yesterday I listened to Kramer for an hour. Very rarely, if ever, am I watching TV entertainment because that's what they are. They're entertainment. I completely disagree with Kramer's numbers on what he think he did over an 8 or a 10 or 12-year period or whatever he says. The numbers don't add up. That's not correct. But I was watching Kramer, and yesterday he admitted mistakes that he had made in the market. And as I thought about it, it brought me to, let's talk about timing. Guys, what is timing based on for you? I want to talk about timing, and I'm going to do this in a broad sense. When you think of timing, market timing, what are you thinking of? Okay. David, I'm going to change this as attempting to catch the highs and the lows. You put catching the highs and lows, but no one does that all the time. Crossing moving averages, so technical analysis, right? Technical, good answer. In fact, Mon, if I can put a little more into that, it's thinking past history. In fact, it's studying past history. Studying the past history of an equity, knowing there is no guarantee of future results, right? It's funny, when I look at people that literally spend all their time, they tell me they're a technical trader, right? They base all their decisions off of technicals. All it is past history, knowing that there's no guarantee that it's going to repeat itself. It might. It's what we call looking at support and resistance levels, but that's dependent upon new orders that are placed by institutions. So it's really, it's really kind of funny that, yes, it's a technical trader is someone that already understands that their trading premise is not going to work over a period of time. Trying to buy low and sell high, Babu, that's excellent. Buy low, sell high. And if I can go ahead and put this in here with no crystal ball, right? Or ride a momentum wave. I love that one. Perception of a continuous trend. And the eventual change of direction one day after another. There we go. That's actually, Abraham, more of a day trading mentality. But I love the way you said it. Perception of trend changes. Don't forget, news events, earnings all affect timing, political. I'm going to be nice. I'm going to say political chirping. How does that sound? I should say tweeting. Well, we'll put it two ways, right? Weather affects timing. Currency affects timing. Fraud affects timing. Making your best educational, so you've heard me say this, Lance, right? Making your best educational guess with the information you have in front of you at that time. Which means you might not have all the information in front of you at that time. What else do you guys think about timing if you thought about timing and making money? What else would you think? Ooh, that, Lance, you're on one today. Possible to make the most of, that doesn't make sense. Make the most of all the market opportunities in front of you. And actually, I'm going to build on that. I love the way you said that, Lance, because I'm going to talk a little bit about that understanding. So let me move directions on you here just a little bit, because if you wanted to, you could still put in here tax reform. You could put, and I notice I mentioned political chirping, but tax reform, government intervention, new products, business cycles. With all of this related to timing, can I ask a simple question to you? Anyone kind of think, my gosh, it's the market stacked against you? Anyone think, my goodness, the market's just stacked against us? What do you think? Okay, David said yes, of course. Anyone else? Look at everything you have to go through for market timing, or what your timing's based on. There is so much that's regarding market timing that I'll be honest with you, since I've only got one, David's the only one that said it so far, yeah, I do think the market is stacked against the individual investor. Trading in the market is not something you do short term. It is not something you can do as a hobby. Well, Kevin, I know someone, and again, there's always going to be an exception to the rule. In fact, I could put in here that exception to the rule most likely is done from luck. But yeah, there's a lot stacked against you when it comes to market timing to make your money. Because this also involves risk tolerance. It also involves emotion. I'll be honest with you. I remember talking to someone in the education business that brags about a paper trading account return. So let me ask this question to the group. I'd like everyone to answer. We got 11 of us here, 13 of us here, 11, 12 of us here. I can't do my math. Is a paper trading account return important? You guys have done some investing or have money managed. Is a paper trading account important? What do you think? Okay. Is a paper trading account important? Maybe for confidence. Okay. Abraham, are you back with us? Are you there? Are you there, Abraham? Give me one quick second. What do you guys think? Boy, you guys are a quiet group today. Okay, that's an interesting one. Not really important, but it can help. What do you mean by that? What do you mean by it's not really important, but it can help? I used to tell people when I was working in the education side, paper trade every strategy 5 times and put it on completely wrong sometimes. Paper trading gives you the mechanics of how to adjust or book profits on trades. But when I hear people talk about back testing, the comment that comes to me all the time is, well, if you're back testing, you better be smart enough to know what happened in the past and place a proper strategy on it. Well, we just randomly pick, I don't see it that way. When I see people back test, they've seen a bullish market, so they place a bullish strategy, and guess what? It works. You mastered timing because you knew what happened already. So, if I was to talk about timing, Kramer the other day put it in things he did for mistakes. But I would just put timing as the understanding of how long it takes to make a profit, or how short it can take to make a profit. Richard, yes to prove concepts, but it worked when a method where some paper trades executed, but in real trades did not execute. Okay, yes, I agree with that, Richard. Paper trading is to prove a concept or a theory, right? So let me ask the group this question really quickly. How many of you want to trade on theories? Give me a yes or no. How many people in this group want to trade on a theory? How many of you want theoretical returns? There we go. I see a bunch of not me's, nope, not interested coming in. Yeah, you know what? I want to trade in real life. I want to make real money, not theoretical money. I want to do things that if I can't make the money that I want to over a certain period of time, I'm putting something in place that will help me make more money down the road. For me, that's collar trading and lowering cost basis and or adding more shares. The reason why I went into timing is because I look at the market right now, and there are 4 of us But right now, I don't see the upside to the markets, and I'm having a ridiculously, obviously I didn't spell that right, should be an I, ridiculously hard time finding undervalued stock. I'll just change it to undervalued companies. I don't see it. I'm having a ridiculously hard time finding a good investment. Risks in the near future. Easy to see. No tax reform this year. December 8th, budget extension. That doesn't happen. And shuts the government down, which is just what we need at the end of the year, right? Rate hike on the, 13th, I believe. Yellen's going out the door rate hike, but I could see that not happening. But profit taking, especially if there's no tax reform. And as I sat there thinking over the weekend, boy, this seems eerily similar to the fact that we've been down this road before. Tax reform is harder than replacement of Obamacare. Tax reform is harder than just dealing with bits and pieces of taxation. The numbers don't add up. Anyone know how many Republicans right now are saying they're not going to vote for the tax reform in the Senate? Anyone know? How many are still a no or were a no last week, and none of them have come over saying they're a yes now? Anyone know? 7. If you have a 52 to 48 partisan vote right now, and 7 of the 52 in good conscience cannot vote for the bill, Arizona, McCain, Croker, Paul Rand, guy up in Minnesota, Montana. The numbers don't add up. What if they go on vacation and work on it next year? December 8th, the budget runs out. No budget extension with President Trump already saying, God, they're jokers. It's not going to happen. Pelosi and Schumer left the meeting. As I started thinking, I thought, you know what? I've been down this road. I watched our market today, but in all honesty, I feel I need to put some bear puts in place. I need to put some minimal protection, maybe some 10% downside protection in place, because we've been down this road where the government did not fulfill its end of the bargain. And the interesting part is I talked with Jeffrey Dunyan, Michael Burton over the weekend, and both of them said, you know, Kevin, it's strange that you brought this up to me because I was thinking something similar. Not necessarily the same thing, but thinking something similar. What percentage do you think the tax bill gets done this year? It's not a high percentage. I bet you're less than 50-50 right now. Can anyone see McCain coming up to the stage for a second time on someone he despises to say, you know what, in good conscience, I can't vote for this tax bill? What about Rand Paul on his high horse? Kroger, well, screw you, Trump. It's personal right now. Someone asked me the other day, well, where would you put new money? I've had some stuff get called out. I need to find places to put new money at right now. I'm not sure I see a risk-to-reward scenario unless someone understands there could be a pretty good drawdown on the money in the near future as volatility starts to kick up. I could be wrong. We're talking about timing again, right? Kevin, past performance on how pathetic our government's been in the past doesn't guarantee the future results, which is true. But boy, I went down this road, and as I had the time over the holidays to look at where we're at and returns and what we're doing, my big guys love me this year. My smaller guys, not so much. My medium guys, in the middle of the road. I've been down this road in the past. And by being down this road in the past, I'm worried about the future. If you were to ask me what's happening this week and why, we got a 1% hopium tax reform jump in our markets today. Anything else that I'm missing today? Was it new home sales yesterday? Can't spell, can't type. They came in at 685,000 versus an estimated 629,000. Was it the FHFA housing price index that came in with only a 0.3 raise versus an estimated 0.6? Was it one of the most useless, right? Was it a small 1,000 consumer confidence or 3,000 consumer confidence survey that came in at 129.5 versus an estimated 124.0? It's funny, I took a peek on briefing.com. They do show you some other surveys or information. Advanced international trades in good? Nah, our deficit's rising again. Advanced wholesale inventories? Well, it kind of shows we didn't make any products for the black sales rush. The wholesale inventories kind of going down. We don't have that buffer this year. Well, is it something I'm missing internationally? Could I have missed something that I put when I looked internationally, and all I had, in all honesty, was Japan. Japan had retail sales. It's kind of the Japan week, right? Why does Japan matter? because our financial growth is looking a lot like Japan's did in the past. If you ask me, you know what's happening this week? We're on hopium, and it scares me. It really scares me. Will our markets end? As I look to what's happening, we got GDP tomorrow. We've got personal spending and personal income on Thursday. We've got construction spending, ISM index, you know. I want to say down, but I'm just going to say flat. Yet it could go down really quickly. No, you know, I'm kidding myself. Down. We're approaching the overbought territory on the Dow Jones. Only 30 stocks, really not that important. It mirrors the S&P 500. A little more important right here. We've been bullish, and we are overbought on the NASDAQ. Boy, when you're at some of these tops, I find I'm having a hard time finding value. Where am I going to go put money? I'm just not seeing it. I still think the S&P will end November up 1.5%. 27.75 to 69.30. We're basically at that 1.5% right now. So it means any pullback, I might have called November correctly, but if you remember, I start out kind of sticking with that, hey, it seems like we have a 2% growth. Let's keep going for a 2% growth. For earnings, I don't think earnings will move us. Marvel today, Autodesk, Jack in the Box, Tiffany's, Lazy Boy, PVH, Tilly's, Express, Kroger's, JCPenney, 5, VMware, Big Lots, Genesco. Nothing really big there. GDP estimates. Be interesting to see where we end up. Tomorrow with our GDP, we'll probably do better, but we're not going to be rip-roaring yet. Nothing internationally that sticks out. So when people talk to me, what am I looking at for investment-wise? I'm looking to have/raise cash and protect current positions. What does that mean? I've done SPX monthly covered calls. I would probably enter index at the money, covered call trades as new trades versus individual stocks. And I wouldn't initiate a new trade for a couple of weeks unless tax reform passes. That's my game plan. And unfortunately, it's an uncertain game plan. But I feel for me, it's going to be more important to protect, especially for the big guys that I have this year, especially for those that have been with me for the entire year. It's going to be more important for me to protect our gains than try to find new ones. And boy, I brought a couple of the things that I've been reading about the Fed officials of fear of finance imbalances and reversal in prices. Stocks rapidly overpriced. Doesn't matter to executions from Peter Costa. Stocks analyzed like killing are showing signs of life. I'm kind of bringing everything in here. Stock rally signals possible melt up into year end, so I'm giving you both sides. But for right now, I'm worried. I'm worried about what's happening in the future. I'm worried that our complacency is going to miss the lack of responsibility we have in our government. That they can't seem to get things done, even though the Republicans are holding all three judicial branches of the government right now. They still can't seem to get anything done. So I hope I am wrong. But if I'm not wrong, I want to make sure that I don't give everything away. We don't get tax reform? Wow. You could literally see a couple thousand. You're probably looking at a 6%, maybe even a 7.5% drop on the down the S&P 500. I don't think you'd see quite the drop in the NASDAQ. We're not even talking about the December 8th budget and extension that was put into place. How we used to talk about that months in advance, and it would drop our market. And our market's missing it right now. I'm pretty sure it's on the 13th that we have a Fed rate hike. Not even being mentioned right now. Man, I just don't see how all the things we're up against propel our markets higher right now. Questions? Go ahead, fire away. What questions? You don't have to think the same way I do. I'm just pointing out some things that are a concern and a worry to me. So what questions do you guys have that I can answer? Okay. Kevin, but you call or trade. None of it matters, right? Question mark. It does matter because call or trading to a certain degree doesn't cover every single penny. Am I interested in going out in time, maybe 4 to 6 months for a covered call to completely pay for a insurance or a long put protection on your stock? No. What if we get our crap together and we get a huge sell-off right now and maybe we bounce back in a couple days in January? What if they get it done next year instead of this year? There's a lot of stuff that worries me right now that I'm being honest with you, I'm having a hard time finding positions to place in the market because I can't see a clearly defined probability or trend to follow. So when you ask, can I call or trade? Yes, I can. And I'm going to. Probably protective put, maybe do a little bit in the money. Yes. But it's to protect what we have in place and not lose too much in a big drawdown, but still give me an opportunity to have a melt up at the beginning of the year next year. Well, what about the sale of stocks that didn't happen this year? They're going into next year for better taxation down the road. Yes, there is that opportunity. And that's why this job of timing is not nearly as easy as people look or see. So the short answer is yes. Can I collar and put a full collar on? Of course I could. And and I might. But my main concern for the next 4 weeks is not to give up gains that are already in certain accounts. Any other questions? That was a good question, by the way. Any other questions you guys have? Costco. Of course you're going to ask about Costco. Yes, Costco is treating us quite nicely. Costco. Orders were placed, some were filled, but Costco right now, most people see a little O next to their account or next to their Costco position, which means there's an order in place. I've got half of the contracts in place to sell off that we couldn't break above it, but we break above that 1774, excuse me, 174. At around 175, it looks like I will be selling off half of my contracts for 100% return, leaving the other half of the contracts in place to see if it goes higher. They had some fabulous numbers, but they couldn't break above that 174 today. You give it 174, it'll be up to 175. It'll trigger the sale of half of my contracts to hopefully put people on a 100% risk-free trade. Best financial candidates. Abraham, you might want to look at the XLK, I believe it is. That is the regional S&P 500 ETF for regional banks. In all honesty, though, tax reform and rate hikes benefit financials. Don't forget Visa, Discover Card, and MasterCard. Those also seem to take advantage of rate hikes, whereas I haven't seen the same movement in PayPal. So any big bank and regionals should benefit from tax reformation and or rate hikes in the near future. With that said, you've seen better returns as of recent from financial lending companies, meaning a Citigroup type bank, I just told you, Discover Financial Services, Visa, MasterCard. So a wide open, broad range there for you to use. I'm still in Zions Bank. Zions and Citi have been some pretty good returns this year. Apple's also moved nicely. In fact, I took down some notes that basically said if we get tax reform, that increases Apple's earnings per share by 18.5%. So, I'll put it this way, if tax reform happens, Apple earnings per share increases 18.5%, and the Russell small caps are benefited immensely. So, quite a bit there that you could look at in some of those regards. Any other questions you guys have? Abraham, I'm a Bank of America guy because it still has big upside potential. Citigroup's done extremely well for me. Morgan Stanley is an opportunity that I have not been in. Stay away from Wells Fargo. Stay away from Countrywide, which is bought by Wells Fargo. What's the other one, though? Not Wells Fargo. Stay away from... Morgan Stanley. Oh, for crying out loud. Slips my mind, but it's the other one that also is heavily invested in the purchase of homes. And no, that's no help to you guys at all. So when I think of it, I'll let you know. Anything else? If not, guys, hey, I appreciate being here tonight. Have a wonderful evening. Next week, we might have some more people coming in. I will let you know. If you have some individual positions you want to go over through the end of the year, feel free to bring them in. We'll go over them next week. Guys, have a wonderful evening. I'm trying to stall here for a second or two to see if any other comments or questions come in. If not, guys, hey, have a wonderful evening. I look forward to talking to you next week. And I guess that's it. We're good to go. You guys take care. Bye-bye.